Here on set is Dryden Pence, the CIO of Pence Capital Management. Nvidia, I gotta say, is probably, it has been for years now, one of the most searched tickers on CNBC.com every single day for years now. But it's still a best idea for you. Why?
Absolutely. And we've had it since 2018 and continue to increase positions in it. Why? Because we're just at the early stages of the build out of the infrastructure around AI. It's like we're just laying the track of the Transcontinental Railroad. Nvidia is the absolute choke point to that. And if we're going to grow AI and what it's going to do for labor productivity at every company in the world, Nvidia is going to be a key part of that. And so we think that their chips are absolutely essential to growth. We think their chips are absolutely essential to increase labor productivity. And we think that the demand signal for this is going to only get greater over time.
So can investors just thematically invest in strictly artificial intelligence? Because if there are ETFs for that. They just buy a basket of stocks. Or do you have to be more discerning and make a fundamental case as to why certain AI-oriented companies are better values or better risk-reward candidates than, say, others?
We look for the choke points, the companies that are absolutely dominant at a particular place in the supply chain, where they're the ones that have pricing power. They're the ones that are able to get excess earnings out of that. So they're out of this whole big theme. Nvidia as a company occupies the choke point in this. They get pricing power. They get excess earnings. That's going to deliver better stock price in most cases. So I think that this is where you do want to be a little more discerning. You want to pick the guys that are absolutely essential and occupy choke points.
It's funny because we were just last hour talking about how the retail investors have been selling Nvidia. We were talking about that with Robinhood. And
At Robinhood, yes.
I said, so if they're selling, who's buying? And now we know who's buying.
Absolutely.
Yeah. So, but your case for the long run is that this company will continue, I guess, to outperform the S&P, even though the past year it's been not so much.
You know, the issue is this theme is not going away. We're in the early stages of this. We're just building out the infrastructure. We haven't even gotten to where we're implementing it across the board. And so when you move to that, this is going to be something that's going to help our economy overall. Every company needs it. You take a look at CapEx spend of Microsoft. You take a look at CapEx spend of Meta. They're continuing to buy what Nvidia is selling. And Nvidia is not having to discount anything. And they've got long backlogs.
All right, let's talk about the Magnificent Seven. We know Meta was in the news yesterday, signing this big nuclear power deal with Constellation Energy. Is the mega cap technology comm services trade, the Mag 7 trade, just one you should just go with and let it just ride?
You know, basically, we're at the early stages of this. This is a generational opportunity to increase labor productivity in this country and really worldwide. And so I think you're in this situation. Anybody who's tied to that is going to have very long legs on their growth for a period of time. So yes, it's kind of this is the beginning of the next industrial age, and this is one of the key points to it.
According to reports, Nvidia is getting ready to re-enter the Chinese market after the Trump government banned the company's H20 processor sales there in early April. The announcement caused Nvidia's shares to rise. ZJK Industrial, a company based in Shenzhen, China, said Thursday that it is increasing production to satisfy the rising demand for Nvidia's B40 project. According to a press release from ZJK, the B40 chip is a specially made AI accelerator for the Chinese market. It targets the mid to high-end market sector and is built on Nvidia's Blackwell architecture. According to ZJK, mass production might begin as early as this month. A request for comment on the officially unannounced custom chip was not immediately answered by Nvidia. Nvidia's shares increased slightly to 142.29 during today's midday stock market trading. ZJK's shares, meanwhile, surged almost 9% to 5.28. The company's previous generation Hopper series served as the foundation for Nvidia's previous AI processor for the Chinese market. However, for security considerations, the U.S. government prohibited the H20 chip's sale. Nvidia CEO Jensen Huang stated on a May 28th conference call with analysts that the business was looking into ways to re-enter the Chinese market. However, it seems that ZJK was the first to inform Chinese consumers about the new CPU. Precision fasteners and other metal components are produced by ZJK for a range of industries, including automotive, aerospace, energy storage, medical, electronic equipment, and liquid cooling systems for artificial intelligence supercomputers. According to the news announcement, ZJK Chief Executive Ning Ding stated that the B40 project offers a number of strong market benefits. It enhances the RTX Pro 6000 workstation graphics cards from Nvidia, which are presently offered for sale all around the world. By the end of 2025, supply chain projections indicate that shipments of B40 chips will have surpassed 1 million units. Charts show that Nvidia's stock is getting close to a 153.13 purchase point out of a 22-week consolidation pattern. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
One of the major components, the big mover here at the open, we're tracking Nvidia, and of course, not the largest mover right now. It's up 0.7%. But here's the move that we're talking about. The valuations of Nvidia, Microsoft, and Apple here. And if you take a look at this chart, here's where you could see Nvidia reclaiming its top spot, but they're still jousting neck and neck here in terms of Microsoft and Nvidia's market cap. However, we will see going forward from here how analysts continue to weigh in. You'll remember some of the commentary coming out of earnings as we were listening into Mizuho. Mizuho was talking about a lot of the concerns being behind us there. Their exact words within that saying the key risk factors and headwinds keeping many underweight on the stock have definitely lessened or lifted. Bernstein, they had said, takes a licking and keep on ticking. Wedbush and Dan Ives saying the godfather of AI delivers again. China H20 headwind, well known, still robust. So all of these things considered, we're now seeing even more of an appetite for investors out there who hadn't already piled back into Nvidia, now having the earnings in the rearview mirror and going forward seeing more total addressable market opportunity, potentially even in a market that they have to try and figure out what type of chip can actually get past some of the regulations and past the sniff tests as they are looking to ship into China. Oh yeah, and some major partnerships in the Middle East as well that Jensen Huang was able to net in recent weeks. We'll see how those come to fruition. But all that considered, the world's most valuable company, once again, Nvidia. We'll see how some jousting plays out over the course of today's trading session as well. Investors fled into the stock back in January as part of the AI scare around China's DeepSeek. They fled out of it, and then ultimately a broader tech rout and concerns over China chip curbs have kept the stock below the $140 per share marker since February. But get this, shares closed above that level Tuesday, rocketing up nearly 50% from April lows. And that means big gains for CEO Jensen Huang. As of June 3rd, Jensen Huang is the 12th richest person alive, according to the Bloomberg Billionaires Index. Huang has a net worth of over $123 billion, and the majority of which is in his ownership of Nvidia stock. He owns about 860 million shares, according to a filing from early March. Huang recently got his first base salary pay bump in a decade. His base salary as the president and CEO of Nvidia for fiscal 2025 is $1.5 million. That's up 50% from fiscal 2024. Variable cash opportunity or compensation based on certain performance metrics that also increased 50% from last year to $3 million. And Huang's target equity opportunity or compensation through stock options or other equity awards that rose by 25% to $27.5 million, slightly above the median of his peers. Nvidia shares are up 5% year to date, and Huang's net worth has increased by nearly $9.3 billion in 2025.
The most well-known competitor of Nvidia in the competition to drive artificial intelligence research in China is Huawei Technologies. However, despite growing interest in domestic solutions, a report from The Information claims that the Chinese tech behemoth is having trouble gaining momentum with significant domestic consumers. Due to U.S. export constraints, Nvidia CEO Jensen Huang has openly warned of Huawei's expanding capabilities and the general pace of China's chip research activities. However, despite tighter supply of Nvidia's products due to U.S. trade restrictions, ByteDance, Alibaba, and Tencent Holdings' looted ADR, three of China's leading AI companies, have not yet placed substantial orders for Huawei's Ascend chips. The information was informed by a number of workers from top organizations that Huawei is having a hard time convincing some of the biggest tech companies in China to use its chips. Chinese company leaders and engineers have expressed worries about Huawei's hardware's performance issues and their anxiety about breaking U.S. trade regulations. When compared to Nvidia's industry-standard CUDA platform, tests conducted by companies like ByteDance and Alibaba showed that Huawei's Ascend 9110C chip overheated and had restrictions in its software stack, CAN. The cost of transitioning from Nvidia to Huawei would also be considerable, necessitating a rethink of the software, engineering procedures, and data center infrastructure. According to executives, Huawei must adjust to its platform if businesses are to migrate to its processors in large quantities, while others keep a careful eye on Huawei to see if an ecosystem can emerge around its chips. Some developers, like DeepSeek, may be crucial in determining the company's future. DeepSeek will draw a lot of open-source developers to build their models on Huawei's ecosystem if it is prepared to widely use Huawei's hardware and software for AI training. However, that isn't the case right now, according to Qingyuan Lin, a semiconductor analyst at Bernstein, who was quoted by The Information. By connecting up to 384 Ascend processors, Huawei's new AI compute solution, Cloud Matrix 384, aims to make up for the performance of individual chips. However, there are technical issues with the system, such as its high power consumption and lack of native support for FP8, a low-precision integer format that is necessary for advanced AI training. Another geopolitical issue is that businesses who use Huawei's cutting-edge AI processors could face substantial criminal and administrative penalties as a result of a recent warning from the U.S. Department of Commerce. At least one Chinese data center company has already canceled a tentative order for Huawei technology as a result of this. Huawei has achieved significant sales to local governments and state-owned businesses in spite of these challenges. However, as regulatory pressure increases on both sides of the Pacific, leading Chinese IT companies do not appear to be planning to leave Nvidia, whose products continue to dominate high-performance AI systems. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Of Nvidia once again being the most valuable publicly traded company here.
Yeah, I'm not sure I read too far into that. That's not really my part of my framework, but I do think very clearly the AI adoption cycle, AI usage, and on a related note, the AI investment cycle clearly remains in a very strong phase. I think we are seeing serious inflection in adoption of major AI services, and along with that comes the need for more AI infrastructure. So I think a company like Nvidia, a company like Microsoft, those are stocks that had lagged for most of the last, call it 6 months. They were probably due for a rebound given the fundamentals behind the AI industry remain so strong.
So if the AI industry remains strong, how do we think about who the potential tech winners and losers of that might be? Because before, when tech has been disruptive, it's been to an industry like retail, with the e-commerce, for example. But now the AI tech could be disruptive to the tech companies who may not all be winners here. How are you thinking about that?
Right. I mean, I think there's very broadly 3 types of companies that are participating in this industry today. And this is a very rapidly evolving industry. But you have chip companies, semiconductor companies, server companies, the companies that are providing the computing infrastructure on one layer. Then you have companies that are coming together to provide the physical infrastructure, so the data centers that are housing the computing infrastructure. And then at the top, you have companies that are building applications and end user facing services that are making use of all the technology. So I think right now what's become very clear is the appetite for AI compute and AI infrastructure is extremely strong. And I think that will continue for at least the next couple of years. What's a little bit less clear is at the application layer, who are the winners and losers going to be? What are the new use cases going to be? And I think beyond the early use cases of chatbots and digital media and cloud infrastructure services, there's a few exciting potential newer use cases like agentic software,
right,
autonomous driving, some use cases in healthcare, but that's going to take longer to play out.
Yeah, since you bring up the application layer, it makes me think about Amazon and their approach with Bedrock to offering a significant amount of options to customers as opposed to really hyper betting on one specific model the way Microsoft has with OpenAI. How do you rate Amazon's strategy in the AI race?
Well, I think first and foremost, Amazon's doing a lot with AI to bolster their core e-commerce business. They're doing more with offering generative AI to their advertisers to create ads that can be shown on their platform. They're doing more with using AI to place the right products in front of the right people. And then they're starting to use more AI in their fulfillment centers, introduce more robotics and do more with automation, which is helping their margins. They're also using it clearly, as you referenced, on the AWS side of their business as sort of an infrastructure provider to third parties. So I think they have a business that lends itself very well to AI naturally. In terms of building their own software applications, I think one of the beauties of the cloud infrastructure model is you can let specialists, third-party specialists, build those on your platform and participate in those economics as well. So that's more where I see things progressing for Amazon, specifically when it comes to building AI software applications.
With a 28% spike in share price in the most recent quarter, Nvidia has drawn attention with its recent foray into AI startups and launch of new programming languages for the automotive market. As the S&P 500 and Nasdaq both recorded winning streaks, bolstered by renewed economic optimism and progress in trade talks with China, these developments are consistent with the market's mild upward trend, together with its emphasis on AI and autonomous technology, which have continued to be major sources of interest in the face of strong market conditions. Nvidia's partnerships with Accenture, Adecor, and other industry leaders strengthen its momentum. Recent Nvidia initiatives, especially its foray into AI startups and new programming languages for the automotive industry, may have a big impact on the company's long-term growth trajectory. The alliances with market titans Uber and Toyota are intended to solidify Nvidia's position in the autonomous vehicle space, which could increase income streams and market share. Nvidia's focus on AI and autonomous technologies is in line with these partnerships, which might increase its data center and AI workloads, thus increasing revenues and margin potential. Analysts predict that if Nvidia takes advantage of these expanding prospects, its earnings would increase significantly. However, as uncertainty is still a danger, these projections may be impacted by export restrictions and regulatory obstacles. Nvidia has produced substantial long-term value over the last 5 years, as evidenced by its very high total return, which includes dividends and share price growth. Nvidia outperformed the U.S. semiconductor industry, which reported a 10.3% rise, indicating good relative performance when compared to its one-year performance. This longer-term benefit is evidence of Nvidia's explosive development trajectory, which has been supported by targeted industry expansions and innovation. Nvidia's current share price of $113.54 is much below the consensus analyst price objective of $163.12. Suggesting possible room for growth despite the recent increases. These industry shifts could be crucial in boosting future sales and profits as the business continues to negotiate the AI and automotive industries. Investors may need to evaluate whether the price objective is justified by the growth potential, taking into account the market dynamics and related risks. The key to Nvidia reaching or surpassing analyst estimates will be the continuous scaling of the Blackwell architecture and its effects on cost control and operational effectiveness. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Bells in the background. The first ticks that I'm seeing clearly, as the futures indicate, show green on the screen. S&P 500, first trade up about 0.25%. The Dow Jones up about, let's call it 1/6%. The Russell 2000 just above the unchanged line, and the Nasdaq 100 leading the way up about 0.3%. I know you're looking at, Kevin, you're looking at S&Ps when it goes to sort of an intraday and daily setup. Talk to us about some of these key dealer levels and other technical spots you're watching in this market that seems to be so news flow driven.
Yeah, well, if you're looking at the technicals on the longer term time frame chart here, obviously the 6,000 level is going to be a key area of resistance. We've been pretty much trying to test that 5970, let's say 6,000 level for the last couple of trading sessions here, but we haven't been able to break through. We've seen this consolidation pattern, and unfortunately, we haven't been able to break through here, Alex. But if you do get a little bit of optimism because of maybe some of these talks, you could actually get a decent little breakout to the upside. And if we do, you're looking at around 60.75 as your next area of resistance. If we do kind of break down, maybe we get a readout that's not as optimistic here from the United States. You're still looking at around that 5,700 level as your key area of support. But we still have some moving averages in the way there in order to try to provide us some support. That 20-period moving average sitting at around 58.85, and you also had that 200-day moving average sitting at around 57.94. So overall, this actually looks, once again, a consolidation. Maybe we break out here. Maybe we actually stall out as the summer, trading is usually kind of coinciding with very low volume. But liquidity is actually looking pretty good for now.
And when we look at that intraday look, I know we don't got a ton yet because it's the 15-day look of the S&P cash, and there's only one candle, and it's still moving because we're in that first 15-minute time frame. But what really sticks out to me is someone particularly who looks at futures more often than the cash is we've been sort of, flagging out to the side here using the numbers for the cash. It's between, let's call it 56 or 59.70 and about 59.90. It looks like you've had a couple failed breaks in both directions on the ES, but this looks as contained as ever on the cash. We just basically retraced from top to bottom here in real time, KG. So when you're looking at this particular setup with that pattern sort of underway and those dealer levels well outside of it, how do you look at this day developing based off the information we have so far?
Well, if you're looking at it so far, obviously we've been in this range that actually, it's funny that we actually hit the upper end and pretty much the lower end and for this opening candle here on the 15-minute chart. We have this range of, let's say, 59.90 to the upside, to the downside, 59.70-ish, where some buyers have actually stepped in. What you get a little bit concerned about, Alex, is if we break down through that 59.60, that probably would then accelerate maybe some of that selling, going down to that 59.40-ish area. But once again, if we get a little bit of a breakout, you get the news flow, you can break above 6,000. I'm looking at 6,020 for the next area of resistance here. But the market looks a little bit heavy. And when we say heavy, what does that really kind of mean? Consolidated type of range here. Maybe on the down ticks, you see actually a little bit more volume getting sold into any type of pops and strength. And that just signifies maybe some exhaustion or compression in the market. But we haven't seen any type of really significant breakdown as of yet. But we did get a little bit close there yesterday, especially going into the close. It wasn't the best close for the S&P 500. But let's see how we actually develop this. If we do have a breakdown, it's not the end of the world here. We still have a long way to go before you actually have a lower low on the longer term time frame. You're talking about around that 58.50-ish area is where you get a little bit more concerned about a full-on breakdown in this uptrend that we've seen from the lows about a month and a half ago.